everyone, welcome back to our channel. I'm Muskan Agarwal and today I will brief you on the different types of financial reports a business needs. Watch the video until the end to learn something interesting about this topic. First of all, several types of financial reports provide insight into your business, past, present, and future financial status. Every business owners ought to have these financial reports prepared as it's allow them to run their business more effectively, analyze their business operations, and help make informed decisions. There are many reports that can company prepare, but every business owner must prepare the following financial reports to run their business optimally. So let's discuss different types of financial reports of a business. First is the income statement. The income statement of a business entity is a financial statement that contains information about three main financial components of the enterprise, which includes the revenue, profit and loss, and the record of expenses incurred by the enterprise during a specific accounting period. But what to do the revenue, profit and loss and expense indicate here? So, revenue refers to the sales made after the sales of goods and services for accounting period. And profit and loss is the net income derived deducting the expenses from the revenue made. And expenses refers to the cost incurred for running the business day-to-day operations. Now come to the second important financial report of the business is the balance sheet. So, a balance sheet is another financial statement that shows the financial position of the assets, liabilities, and equity at the end of a specific accounting period. It helps to determine the business net worth by deducting the liabilities from the assets. Here, assets represent resources that an enterprise owns. The two main classes of assets are current and non-current assets, and liability reflects the obligation the enterprise owes other businesses and individuals and include the interest payable, taxes, loans, etc., which are divided into two parts: current liability and non-current liabilities. On the other hand, equity is the difference between assets and the liabilities. Now, the third type of financial report is cash flow statement. The cash flow statement shows the movement of capital within the business organization. It comprises both cash flows and outflows. Cash flow can be put under three broad heads of activities such as operation activities, in financing activities, and the third is investing activities. Now jump to the other type of report, notes to accounts. It is also known as notes to financial statement. They are supporting pieces of information that are provided along with the final account of a company. They are required to provide under law and include details regarding reserves, depreciation, inventory, share capital, provisions, etc. The notes to account help the users of the accounting information to understand the exacting financial position of the business and estimates its future performance. It also helps the auditors to determine whether the accounting policies have been adequately implemented and reflected in the financial statements. Now, the fifth report is the bank reconciliations report. Bank reconciliation report is the record book of financial transactions from a bank account. This financial statement helps the account holder to check and keep a track record of their funds. It indicates the difference in specified data between the bank balance in the entity supplied by the bank and the corresponding amount shown in the entity records, that is cash book. Now, what is payroll register? The payroll register is a financial statement that contains the record of the wage payment information of each employee of the organization. It also shows the gross pay, the tax withholding, deductions, and net payment, and other payroll related information for every period and pay date. Next is register. A check register, also known as a cash disbursement journal, is a record of all the checks and cash transactions done by a business during a particular accounting period. Depending on the nature of your business, number of verticals within the business, an entity can maintain more than one check register for each checking point, such as payroll check register, operating account, check register, etc. Next point is journal ledger report. A general ledger report is a comprehensive summary of different parts of accounting taking place in a business entity. It is the source through which other financial reports of a business entities are prepared, such as the balance sheet, profit and loss, account reports, etc. Now discuss the other business reports. A business analysis report draws financial information from financial statements like balance sheet, cash flow statement, and income statement. This report also help in analyzing the financial information of the organization. Next is financial analysis report. A financial analysis reports highlight the financial strengths and weakness of your business. It is a representation of financial health of an enterprise to the investors. It's talk about the investment essentials, valuations, risk analysis, detailed result, etc. Now, operation analysis report. An operation analysis report depicts the cost, expenses, and sales made by the business enterprise. The report presents the monthly figures, and comparison can also be made between the figures of the previous year and the current year. The operation analysis reports also includes management reporting services, sales reports, purchase reports, etc. So that concludes our video on different types of financial reports that a business needs. Now, for more such information and queries that you may have, contact Enterslice from the details provided below. At Enterslice, we have an excellent team of experts who can assist you regarding various BIS registrations. You can also comment down below on any queries that you may have. For more such videos, subscribe to our channel. Thank you.